Hi everyone, welcome to today's video. So on today's video, we are going to have a very honest conversation about when is it that you should sell your stocks, right? I will tell you some key points, some key things that I incorporate while making a decision whether to sell a stock or not. So I will share that strategy with you. Hopefully, you will find the video to be insightful and useful. Please listen to this video till the very end. If you understand half the things, implement half the things, then you will see half the results. So please don't do it. This is a finance related video, not an entertainment video. Please watch it till the end. Make notes. This is important. Okay, with that said, let's get the topic started. And let me first and foremost try to empathize with you. So entering into a stock is fairly easy. You just press the buy button and then you assume that, hey, few months from now, I'm going to sell this stock at a profit. Or in fact, tomorrow this stock will go up by 10% and I'll sell it and make profit. So that is the intent with which you buy a stock and you feel very excited when you're buying things. But it becomes extremely difficult for you to sell things, be it a house, be it a car, be it anything, because you will always question yourself, I have purchased this stock. What if I sell it at the wrong price? What if I have to sell it at a loss? Should I do it or not? What if I sell this stock and then I am struggling to reinvest my money? So bunch of things will go through your mind. So let me break apart these arguments and these points by giving you real examples of things as to how I have sold it, when I have sold it, and what was the intent or thought process behind it. So essentially, I'm going to discuss 6 key points with you. 6, that's it, right? So I'll speak in 6 simple points. We'll use real world examples of some of the trades that I have made recently so that you are able to connect with the video better. So the first reason when you should sell your stock is that your target has been met. Okay, what do I mean by that? For example, if you have picked up a technical target, and if that target meets that, hey, I'm going to buy this particular stock at 1000 rupees and my target is that this particular stock will reach 1200 rupees, I'm going to sell it. So if that target has been met, then go ahead, sell that stock, nothing wrong with that. This is called as taking a trade. Now, this sounds very simple, but the problem is that people don't understand how to formulate these targets. They would not know what the right buying price is. They would not know what the right selling price is as per the technical indicators. So it's very important to understand the technical indicators also if you are taking a technical trade, right? So let me give you an example of a technical trade and then let me give you an example of a fundamental or commonsensical trade. Recently, I gave a swing target for HUL that we will buy it at approximately 2400 and then we will sell it off at 2600. Now, how did I reach that conclusion? So let me help you understand that point more thoroughly so that you are able to grasp this concept a little bit better. Okay, so let me take you to my screen and let me explain why did I give that call for Hindustan Unilever. This is something that people don't tell on YouTube openly. I'm telling it to you. So please press the like button. This helps the video get out to more people. So okay, let me take you to my screen. So now I talk about this range-based trading that I do very frequently. This is the range in which HUL had been moving for the last few months. So if you take a share pattern from June, you will clearly see that the stock had shown an up move of approximately 8.5%, right? From what levels? From approximately 2350 level to 2550 levels. Now this was an up move, right? And this was a clear up move. Now just simply draw this range. In the past, I have discussed this technique in detail. You can check the video on this, but I'll quickly explain it to you again. So let me simply draw out a range and this is the range. This is the support and this is the resistance, right? So this is the support and this is the resistance. So we let this move get completed and it showed an upward of 8.5% move. Now, according to the technique that I had highlighted earlier, what you simply need to do is that whenever the stock returns to its base price, which is the support, which is here, you buy this stock and then you sell this stock whenever it hits this line, right? Approximately. This is the technique that I discussed earlier. So that was the reason why I gave a call at 2400-ish levels that you should buy this stock somewhere in August, and you can check the date of those videos also that it was later in August that I gave this call. Then I sold this stock approximately at 2600 levels. Why did I sell it at 2600 levels? Because there were consecutive upward moves in the stock. Then I waited for it to get completed. Then I sold that stock. So this was a technical trade that I took. The target got met and therefore I sold the HUL stock. Now you might say that, hey Akshat, you recently made a video and you said that you will be re-entering the HUL stock. So I'm getting confused that you sold this stock earlier and now you're re-entering it. Okay. So basically this entire discussion that I just had with you, this was a technical trade, right? This was a technical trade with very clear indicators, very clear targets that, hey, buy at 2400, sell it at approximately 2600, make a profit. In literally a week or so, we made a profit of 9%, which is massive, right? Which is huge, especially given the type of stock that you're trading in. This is HUL. This is one of the most stable companies. This is one of the most risk-free stocks that you can buy. And if you're making 9% return on that, what is wrong with that? It is absolutely great from that perspective. So therefore, I took that technical trade and moved on to a different trade. Now, what I'm doing with HUL is that I'm trying to aggregate this stock from a long-term investment perspective, right? By long-term, I mean that, hey, what would the company look like in 10 years' time? Am I happy with that growth that it might exhibit? My short answer is yes. Am I investing in HUL right away tomorrow? No, right? I will wait. I will let you know when am I buying it from a long-term perspective. Then please don't comment that, hey, Akshat, I bought HUL on your recommendation and today it fell by 2% or 3%. No, we are buying it for a 10-year period. So have a little bit of patience there. Okay, you will make money on that. So this, I hope, conveys that the first reason why you should be selling a stock is very simple, that the technical target has been met. And that is the reason why you're selling the stock. Now, the second reason why you should be selling your stock is that you have found a better trade, right? That is the reason why, and you don't have any money left. So, for example, in my case, what I'm doing right now is that I'm going to sell Kotak Mahindra Bank. This is a swing trade that I had taken. I have spoken about it on my earlier video. Please comment. If you have been watching my videos sincerely and regularly, you will understand that. Now, why did I buy Kotak Mahindra Bank? Can I show you like a similar parallel example what I had shown for HUL? Was there a technical pattern forming there? No. Also, please understand that it is not only technical traders who move the stock market. People make fundamental investments and people make commonsensical investment. I had been saying on this channel day in, day out that please go invest in banking stocks. Please go invest in banking stocks. Please go invest in banking stocks. Have I not? So I've said that. Why? Because at one point I had made a video. I had clearly shown that, hey, you know what? All the sectors have grown, but Nifty Bank is the indices that form the entire banking sector in India. That has not given an upswing yet, right? And which was a laggard stock on that? It was Kotak Mahindra Bank. No technical patterns were forming, no technical traders were saying that, hey, go buy Kotak Mahindra Bank and look at the growth in this particular stock. It had been going up since early September and I'm sure that many of you would be sitting on profit on this. Now, in my case, I run different businesses, I have cash flow coming in. So I'll pick up that money and I will invest in my next technical trade. So I will sell a little bit of quantity from Kotak Mahindra Bank. But if I had severe cash crunch and if I found a better trade, then I would have sold my entire holding on Kotak Mahindra Bank, booked the profit and moved on to my next swing trade. That is what I do and that is the reason why I have approximately 65 stocks in my portfolio. A lot of you were commenting that, hey, Akshat, you're over diversified, this, that. Okay, my portfolio size is big to begin with. I take very frequent swing trades also, depending on the market conditions, and I make long-term investments also. On my long-term portfolio, I don't have more than 20 stocks. But for other swing trades, I keep on identifying new trades and keep taking it. Therefore, I have a larger portfolio. Now you would say, Akshat, you spoke about a better trade. So can you talk about which better trade you are speaking about? Okay, folks. First and foremost, this is not an investment advice. I'm honestly sharing whatever I am doing. I am literally telling it to you on open platforms. Please do your due diligence. You don't need to give me any thanks if you are making profit, but also do not spread unnecessary hate in case you are sitting on some short-term losses. It's a part and parcel of the market that if someone is genuinely sharing their strategies, if they share 100 strategies, 30 will go wrong even if they are genius. Okay, that will happen. No one can be 100% correct about stock market, including Mr. Warren Buffett. No one is. No one. Absolutely no one is. So, which better trade I am talking about? I am talking about IDFC First Bank, right? So, as of today, 27th September, I have purchased IDFC First Bank. I have put in a little bit of money here. You can see me making the investment here. I will put the live trade, me buying the stock, so you can check it. Right, so I'm moving to this trade. If I had no money left, I would have sold my entire holding of Kotak Mahindra Bank and would have moved to IDFC First Bank. Since I have cash coming in, touchwood, I have invested money in IDFC First Bank also and I'm holding Kotak Mahindra Bank as of now. In fact, you want to get out of Kotak Mahindra Bank, it is completely fine. You would have already seen an upswing of 14-15%. Here is the proof of that as well. Now comes the third reason that why you should be selling your stock. So the third reason why you should be selling your stock is that the market conditions have changed. Now there was a lot of hoopla that was going on very recently because of the Evergrande crisis. China is going to go nuts. The world is going to get destroyed. Economies are not going to survive at all. Everyone was giving that commentary. My video is here. I did not say any of that stuff. I categorically told you that the Evergrande crisis is not like 2008 crisis. And literally in a week, the stock markets came back up. Lot of people were messaging that, hey Akshat, the India Bulls housing finance stock that you recommended, it has come down. What are you going to do with the housing sector? This, that. I told you that I'm going to invest in India Bulls housing finance. I have invested it. It came down. India Bulls housing finance came down. So let me show you the stock as well. So India Bulls housing finance came from approximately 250 levels to 208 level, 208, 209. And now it is climbing back up. Now it is approximately back at 235 levels. Now I'm still sitting on profit on India Bulls housing finance due to this Evergrande crisis. Did I sell even one stock of India Bulls housing finance? No, absolutely not. In fact, I purchased a little bit of more stock for India Bulls housing finance. Now, why is it important for you to understand these type of crises? Because if you get swayed by any news item that is coming your way, you will go mad. You will go crazy in terms of analyzing the stock market. Now, a lot of people will say that, you know what, this Evergrande crisis is here. It will just destroy the entire world. This, that, bull market has just ended. Bear market has started. They will give you all sorts of negative news. You need to be sure about your analysis and stick with it. The stocks will go up. Stocks will come down. 10, 15, 20% upswing or downswing on a stock is completely normal. I'll say this statement again. 10, 15, 20% upswing or downswing on a normal stock is very, very common. Please do not get scared by it. If you get scared by every little news that is coming in, you will not be able to sustain in the stock market. Then stock market is probably not a place for you. You should go invest in FDs. You should go invest in real estate, gold, and be happy with little bit of returns that you are making. On one hand, you say that, hey, I want to make like 30% return, 100% return, 500% return. But no, I don't want to take any volatility on it. That is not how it works. You have to stick by your analysis. At times, you will take loss. I would also take loss. I'm not saying that I'll make money on all the stocks that I'm purchasing. No, that will not happen. That does not happen at all. That does not happen with anyone. If anyone is saying you that I've never sold my stock in a loss, they are lying. Okay, it's plain and simple. They are lying. It doesn't work out that way. Now coming back to the point, if market conditions change, for example, if you genuinely thought your analysis told you that, you know what, this entire episode of Evergrande is horrible and it's going to bring down the stock market, you have done your analysis, you have heard all the sides of the arguments, you need to make a call that, hey, is this Evergrande crisis going to impact the stock market and to what degree? If you believe that, okay, yes, it's going to impact, then you should not be holding any stocks on India Bull housing finance type of companies or any real estate stock right now. You should have sold it, right? If you're holding it, then you indirectly believe in the narrative that, hey, this Evergrande crisis was not critical. We will be able to sustain this and there will be no major correction that will happen in the stock market, at least because of this factor. So you need to pick a side. It's not as if that you will stay somewhere in the middle. Okay, I believe in the Evergrande crisis also. Then I also do not believe in the Evergrande crisis. Please don't do that. Please pick a side. Please form your opinion. That is very important. If you're not a decisive investor, you will not be able to survive. So please analyze the market conditions, and if you feel that, hey, whatever analysis or conclusion you reach on about a particular news, act accordingly. In my case, Evergrande crisis was not very prominent. I have made a separate video here. You can watch it. That was my verdict. I stuck by that verdict. Fourth reason why you should sell your stock. If the fundamentals of a stock has gone bonkers or it has become weak, then it is okay to sell your stock. For example, we are struggling with a company called as Ujjivan Small Finance Bank. This is a stock on which I am sitting on a loss. I am sitting on a decent amount of loss on this particular stock. Am I worried? No, because I'm still a big believer in the small finance banking industry in India. In fact, I'm a big believer in the banking industry in India. My hypothesis or long-term hypothesis is very simple. That bull run is going on in India right now, or rather in the world right now. India is going to be one of the major recipients of this bull run. They are going to benefit the most from this bull run, especially after the China crisis, whatever is going on in China. India will benefit massively, and if this bull run continues for the next 5-7 years, I will not be surprised if the Nifty hits 37,000 also. So what do you think would happen in such a scenario? Banks have to support it. Therefore, I am a big believer in bank. In fact, majority of my stock portfolio is directed towards bank because I strongly believe in this bull run story, India's growth story. Therefore, I have to believe in the banking sector in India. Now, coming back to the topic that if the fundamentals of a particular company shakes up, then what is it that you should do? So let's take the example of Ujjivan Small Finance. Now you and I as normal retail investors would not have known, absolutely would not have known that hey, there are some management issues that might be going on. By the time the news came in, the Ujjivan Small Finance Bank stock had already tanked a lot. These management related issues, trust me, big investors know, but you and I cannot know. We would not know. We have to play safe. Therefore, I always say, always say, please do not invest more than 3 to 5% of your entire capital on one single stock. No matter how much you believe in that stock. Don't do it. Even if it is HUL, even if it is HDFC Bank, because we would not know in a timely fashion when some management related issues might creep up. Now, management related issues crept up in Ujjivan Small Finance. Now, what is it that we can do? We should just hold off and wait for correction because macro trend is that hey, small finance banks in India will go up. Let's wait and see. Ujjivan Small Finance has been a decent bank. Management related issues that has already been factored into the price. So if I show you the chart of Ujjivan Small Finance Bank from August, how much it has corrected. So it started corrected somewhere here, right? And it went down up until here, right? So the correction has been approximately 43%. Approximately 43% correction has already happened because of bad management. Now this correction has already happened. Now what's the point of crying over spilled milk? Correction has happened, right? Now you just need to make a call that, hey, is this okay? Or do you still believe that the management will keep on doing more shady stuff? According to me, systemic changes have been made. Restructuring has happened. So I don't see any major issues with Ujjivan Small Finance Bank. Slowly, within a year or so, I'm quite confident that if the bull run continues, Ujjivan Small Finance Bank might in fact give you a lot of profit. So that is the reason why I'm not selling this stock. But if sitting right now, you feel very iffy that, hey, management has done this once and it will do it again. If you believe in that type of a narrative, you should have already sold your Ujjivan Finance Bank stock back in early September itself. Now, the fifth reason why you should be selling your stock is to adhere to the principle of diversification. So diversification simply means that let's say that you're investing 100 rupees in the stock market. Now you go and buy all banking stocks, literally like just HDFC Bank. Your 100% portfolio is HDFC Bank. Done. That's a very bad strategy because what did I say? That you should only have 3 to 5% of your entire portfolio in one single stock. So you should have little bit of banking stocks. Then you should have FMCG stocks. You should have pharma stocks. Bunch of different sectors. And within those sectors, you should diversify. For example, on that Ujjivan Finance example, I am investing in small finance bank and I hold massive quantity of Equitas Small Finance. So whatever loss I'm making on Ujjivan Small Finance, that is very little, but there is a lot of profit that I'm sitting on at Equitas. So what I'm trying to tell you that even in small finance bank, I'm well diversified. So in case you're selling your stocks to undertake that diversification, you should do it. This is something that I will also do in this bull run because I am sitting on a lot of banking stocks. So my portfolio is concentrated on banking stocks right now. This has happened because I believe in the bull run narrative. I invested in a lot of stocks from swing trading perspective. So bottom line is that I somehow got more concentrated on banking stocks. Now I'll have to lighten that position. So therefore I will sell some of these banking stocks and take positions in FMCG. I spoke about buying HUL. I will do that. I spoke about buying Relaxo. I will do that. I spoke about buying Symphony. I will do that. You can check the links in the description box for the stocks that I'm buying. You can take a look at that and study this entire list. In fact, I bought a new stock today. I will make a separate video on this during the week. So we will cover that in more detail. Again, that is a non-banking stock. So fifth reason why you should be selling some of your good stocks is just to stay diversified. Because if a market correction happens, then it's very likely that banking stocks will fall a lot or finance stocks will fall a lot. That always happens in every single correction. So therefore, we have to stay diversified and it's okay to sell stocks when you're trying to be diversified. Now comes the sixth and final point as to when you should be selling your stock. So there is a saying which goes something like this, that you should buy on rumor and sell on news, right? Buy on rumor and sell on news. Now the latest example of this would be the thing that is happening between Zee Entertainment Limited and Sony merger. So there is a lot of talk that has been going. Some news is also coming that, hey, you know what, these companies have merged. because of which people like Mr. Rakesh Jhunjhunwala have made a lot of profit. I don't know whether he has booked that profit or not. I'm not privy to that. But bottom line is that whenever you start getting these type of news, you should sell your stocks. This is in general. There is an upward trending news which is skyrocketing a stock price. You should be very careful and get out of it. So let me show this to you by using the example of Z Entertainment Limited. Now here is the stock price. So the stock was trading at approximately 182 and it came up to 353. So there was a 94% increase within a matter of days, literally within a matter of days. Now this is not realistic. Therefore, whenever you hear these kind of massive news, get out of it. Same situation used to play out with Reliance. Now Reliance stock is consolidating. It's a good stock. No problem there. But the same situation, not to this extent, but the same situation played out in Reliance. So always be wary of news. If you have purchased things on rumor, for example, if you hear that, hey, Mr. Rakesh Jhunjhunwala is going to buy this stock, this, that. If you hear the rumor that, you know what, there's going to be a merger between Z and Sony, it's fine. Buy that stock. But when the news comes, sell it off, right? Don't wait for too long because this will come down. So just to recap, a few important points when you should be selling your stock. So number one, if your technical and fundamental targets have been met, sell the stock, no problem. If you run out of money and if you find better trades, sell the stock, no problem. If the fundamentals of the stocks have changed and you do not believe in that stock, for example, Ujjivan Small Finance, sell that stock. If you need to rebalance your portfolio, it is completely okay to sell even some of the good stocks. And finally, if you are trading on news, which many retail investors do, please sell the stock when the positive news comes, because if that positive news does not pan out, for example, in Z's case, still there is a lot of debate whether they will get a go ahead with this merger, whatnot, right? So if this deal falls off, then the stock prices will correct massively. So I hope you enjoyed the video. Please give it a thumbs up and I will see you the next time.